Alright guys, today we're going to talk about EOS. Today's date is January 16th. It's about 6 p.m. right now. And we're going to talk about EOS because I think that it's going to be fairly bullish for the short term coming up here because we're reaching some very critical support and resistance areas. But before we do this, I want to talk about risk to reward. Okay, I'm not sure if you guys have heard of that term before. I'm sure a lot of you have, but I'm sure a lot of you haven't as well. What risk to reward is a way to manage your money and a way to manage the risks and the consequences associated with trading. So you want to make sure that you have a very good risk to reward for every setup that you enter. So if you know the possible entries and the possible exits, then you can easily evaluate the risk to reward. So the risk to reward formula is very simple. It's your target. It's equal to your target minus your entry price, or here I should be more specific here, target price minus entry price, all divided by your entry price minus your stop loss. That's how it's calculated, okay? So you want to, and it's usually denoted by R. R, like for denoting risk, okay? It's usually written like this, RR or RR, something like that, such as 5 to 1, 2 to 1, 3 to 1, like that, as a ratio. Now, the way setups work is like this. You want to have a good risk to reward, and we're going to go over that. Now, let's say you went to the casino every single day for 10 days in a row, or you went to the casino every day, right? And you played 10 games per day. 10 games per day. And let's say there was a risk to reward. There's risk to reward of 2 to 1, okay? And you're playing $1,000 position sizes each time. Sizes. Let's say you play 10 games per day, which I talked about. And let's say that your win ratio is 50% win and 50% loss. 50%, okay? Now let's say that each time you're playing a $1,000 position, you have a chance to win $100. Chance to win 100 each time. And you have a chance to lose $50 each time. Okay, this would be a risk to reward ratio of 2 to 1. So this is for percentage wise, right? Just using 10% win, right? It would also be a 2 to 1 risk to reward ratio if it was, say, you had a chance to lose 125 each time, right? But in our particular case, we're just going to risk only 5% of our position size here. So now over 10 games, so 5 wins at 100 each is equal to $500 profit, but 5 losses at 50 each is equal to 200, right? So what's the net profit? Net profit is equal to, obviously, your wins minus your losses is equal to 500 minus 250. So your total net profit over 10 games is equal to $250, right? Because you won 500 and you lost 250. Would this be worthwhile for you guys to go to the casino every day, and just assuming there was a 50% chance, okay? Not 50% chance, but like just in general, right? You win 50% of the time and you lose 50% of the time. That's kind of the stock market, right? It could be like the stock market, but when we use technical indicators, it gives us an idea of which way it could lean more than the other, which makes us weigh our choices, whether we will enter a trade or not, right? So obviously we lean towards it up or down a lot more as well, but let's just say you were right 50%, you won 50% of the time and you lost 50% of the time at the casino, but there was a risk to reward ratio of 2 to 1, where you can win twice as much as you lose. Obviously, it would be very worthwhile to go to the casino, and if you just kept playing every single day, you would win over time an average of about $250, right? And we can also use win trade expectancy formulas as well to calculate all of this as well. Okay, I just wanted to establish some of the guidelines first of all before we get into this trade setup, which has a decent risk to reward setup. Now, if I go to a daily chart first of all, if I go to a daily chart right here, it's very debatable about how we can call Like, do we count this flash crash right here, right, to $3? I don't think that it should be counted, in my opinion, right here. Okay, I don't think that it should be counted. Now, if we count this as wave 3 up here, right, wave 1, like 3 up here. So now the debate for Elliott wave is this, okay? The debate for Elliott wave is, where's the actual wave 1, okay? I guess it would be right here, a very bullish, super bullish wave 1. But the argument now is that there was a flash crash from $10 to $3. Do we count that? Because it does overlap severely into this wave territory. What I would say is, unfortunately, yes, we don't have to count it, because it's a flash crash, first of all, and secondly, it's in a leveraged market. And in a leveraged market, stuff like this can happen. These wave 4 into wave 1 territory will most likely hold true in non-leveraged markets where you can't short and you can't margin trade to go long on it. So I would say that this actually holds true to be wave 1 right there. Where this right here, I remember even counting this before, where that's wave 1, that's 2, right? And possibly this could have been 3 with a very extended 5th wave. And I remember this one getting a 1-to-1 extension as well. No, that one, actually, yeah, that one can hold true. Sorry, I was taking it from over here. Wrong spot. Right there. And this one did a 1-to-1 extension. So yeah, wave 3 is longer than it. So then we would call that wave 1. Okay. And we would call this right here wave 3, since it is longer. And here, it just made like an ABC type of corrective pattern. And by the way, do you guys like my EOS call there or what, huh? My prediction was 1633? No, 1863. Hold on, what was it there, guys? We gotta go to YouTube. No, we're just going to Steemit. I had it here. $19.24. That was my prediction. 1924 was my prediction, okay? And what did we hit, guys? We hit $18.67. I was off, clearly. But you know what? It was only off by about 70 cents. I think we can take that as a good victory, right? And I predicted that when EOS, or when it was only $13 still. So that was an incredibly good prediction for the people that got in. So here, I'm gonna go daily still. So right now, after we form 5 waves like this, what happens is it makes an ABC sort of pattern like that first, okay? We could very well get some sort of triangle pattern in here like this, you know, where it makes an ABCDE touch. That's likely. It could make an ascending triangle as well, right? It can make an ascending triangle. It can make a flag consolidation, something like that. Who knows, right? It can absolutely happen. Now, what we want to do is verify some of the counts inside of here. We say to ourselves, okay, well, if this was wave 1, that was wave 2, that was wave 3, that was wave 4. Well, if that was wave 5, how's that going to work right there? Well, that doesn't make sense at all right now, does it? Well, let's just say we brought wave 5 down to over here, and now we went to a lower time frame. And we say to ourselves, good gosh, this looks like it could be 5 waves down here right now. We want to count the waves like this. 1, 2, 3, 4, and 5. Like that. Let's see how it looks on a 1 hour. I think there's going to be one more drop, guys. I don't count 5 subwaves in here yet. Not yet. Do you guys count 5? No, I don't either. No, not yet. We're on a 15-minute time frame now. I'm still waiting for the 5th count, guys. Here, okay, is all consolidation up to this point where it breaks out. Therefore, the wave 1 starts here, This wave 2 starts here. Alright? We're meeting resistance right now where the wave 4 territory is. That's usually what happens, right? This is wave 3. It's longer than wave 1 there. And now we just gotta count 5 waves coming down here on a small time frame. Can we count 5? Not really. 1, 2, 3, 4, 5. That's 1, 2, 3. And this is wave 4. It's into the territory of wave 1 there. But I think that this is making kind of like a diagonal shape. Or an expanded flat. An expanded flat like that. And I think there might be one more touch down here actually. I think that there's going to be one more touch. Maybe. Maybe not. Maybe even a double bottom, something like that. But either way guys, my whole point is that I'm going to do a trendline analysis now, okay? But before we do that, we want to see how much did it retrace so far. And we see that so far, it has retraced to a very respectable number. Here it punctured through for this flash crash, if we count it, to the 55 EMA. Here it almost touched it, right? But if we look on the 4-hour chart, it's below it, absolutely. Right now it's below it. But if we look on the 4-hour chart, what we see is this is the 55 EMA. Sorry, this is the retracement right now. And what we see right now is beautiful. It's actually a gigantic hammer candle that just formed on the 4-hour. And on the 3-hour chart, what we see is most likely one of the most ideal candles. Actually right here, this looks like 5 on a 3-hour time frame. 1, 2, 3, 4. 1, 2, 3, 4, 5. Well, this looks like 5 right here, absolutely. 1, 2, 3, and that's 4, and that's 5, right? And this looks like 5 right here as well, where it's 1, 2, 3, 4, and 5. Now the only thing we need to confirm is that on the very 5th wave here, where's the 5 waves though? Okay, because I don't see it, and we've gone through that before already as well. Like we talked about this already. 1, 2, 3, 4. I'm expecting one more small one. Honestly, I'm expecting, who knows, it might be a very small one, it might not even happen at all, but we do see the volume drying up and we do see resistance here. So we've confirmed the Elliott wave almost down to the wave count on a 5-minute chart, right? So make note that this right here, guys, this right here is a hammer. And I'm going to show you guys what a hammer is, okay? Whoops. Hammer candle. Right here. A hammer candle, just in general, I'm just going to YouTube, right? Or Google Images. A hammer on a downtrend, it usually signals a reversal. Right? And I'm going to explain to you the market psychology behind the hammer. Here, it didn't quite hold because it held temporarily because we were on the first subwave of the one coming down. Here, it temporarily held because we were still on the 3rd wave coming down. But now that we are pretty much on the 5th wave, most likely it will hold. And the psychology behind it is that the bulls defend successfully. The bears have made this massive attempt to push it down, and that's why you get a long wick. But the bulls have pushed it all the way back up. And I'm going to show you guys, for example, I'm going to show you guys one of the times where we saw Bitcoin defend against the bears. And it defended it so well. Okay, I'm going to show you the candle. Where was it? No, I think it was in November. Right here. This series of candles right here. The last time we got this shooting star, so everyone thought that it was going to be a really scary candle, and also it was going to be the signal of reversal, but it defended there. And the other time we got a dragonfly doji was right here, guys. This Dragonfly Doji, I remember very clearly where it was also written about on CoinMarketCap there, not CoinMarketCap, CoinDesk there, and there might have been one more right here, this one right here. This Dragonfly Doji slash hammer right there on the bottom of a downtrend, it signaled that this was most likely going to be a good stop loss level, and then the uptrend would start. So every time we see one of these types of candles, I know that this is on a daily, and I'm talking about on a 3-hour chart right now, but every time we see one of these candles, it means that it can be used as a trigger chart for that the bulls are slowly starting to regain control. And ever since I've been wanting to make this blog, or not blog, video, the price was actually at right around here already. It was like 2 hours ago. It was at 840, and I thought that the price was going to skyrocket there. So yes, I do believe that we are incredibly close to the bottom, if not at the bottom already for EOS. But what I also want to do is trend line analysis, okay? I want to draw a trend line, say right here, or right here rather, because that's what we see, right? Right there. We see this holding right now. Not only do we see it holding, we see it holding on the trend line and at the 0.5 Fibonacci level. Now, all of my technical analysis are more so geared towards swing traders, right? Not like super duper long-term holders. It's more so geared towards holding up to 2 weeks at most. So this is one method that we use here to find a support. Another method is to take the lower end of the parabolic movement, maybe something like that. Okay, so I'm taking these first 2 points first right here to get this parabolic movement upwards. And then for this one here, I'm taking all of these ones, and there's obviously going to be a third one as well between this point there and this third point right there. So we get some sort of fans going up like that, right? That form apex points. So now we take a look at here and we say, hey, is the downtrend done? This long wick is pretty damn nice. Look at right here. This is the long wick that went down. Every time there were really nice long wicks at the end of a downtrend, there were possible buy zones. So that right there, guys, is definitely a possible buy zone. And I'm talking about right now I'm no financial advisor, keep in mind, okay? I am no financial advisor. I'm just speaking about what I'm going to do because I'm going to be investing in EOS. Right now, guys, like around this price, 1021, and I'm going to justify why. To anything below here is a good buy zone for me. If that falls through, I would be more interested in this other fanned out one here. See this one right here where we're taking different support points. So we're just planning to see if it could hit here. And if that fails, then I will use this point right here at the 618 Fibonacci level. Okay, so altogether, my buy zones are actually pretty big, like that. Okay, they're very big in general. Now I'm gonna show you guys my logic. I'm gonna show you guys my logic that it's very bullish still. Okay, even though we downticked right here, yes, we did downtick. We have to make note that all these indicators are smoothing out right now. Okay, this one here in the long term eventually looks like it wants to come down like that and curve, because the lower time frames as well, they're smoothing out, guys. The indicators are definitely smoothing out. It's not reaching incredibly bearish zones of, like, you know, super duper low for a long time, like Ripple, for example. This one here also has the formula for a bull run right now to smooth it out like this and curve up. So I'm definitely interested in this coin right now. See, this coin is actually starting to curve already, and we're going to the positive side of the histogram. So what I think is going to happen is that if this is A, B, C, D, and E, assuming that this is A, B, C, D, and E, and you know, we're just about to make the 1, 2, 3, 4, and maybe one more down there, right? Actually, it might have been made already. 1, 2, 3, 4, 5. It might have been made already. Don't get me wrong. So if this was made already, guys, A, B, C, D, and E, well, let's go look at Bitcoin and see what happened. All right. We look at Bitcoin. And the first thing that we notice about it is that it makes the ABC, or it makes the 1, 2, 3, 4, 5, like in here pretty much. I can't remember the exact count. I think it was like that, 3, and no, it wasn't that one. It was like this. So Bitcoin did its 1, 2, 3, 4, and 5 Elliott wave count, and then it made its way to its B point over here finally. So what I would say is that EOS right now, it's lagging behind. Its uptrend was very different, right? It wasn't directly proportional to or correlated to Bitcoin. It had a mind of its own, and very bullish coins like that can do this, guys. It can do this, and I do think that we are at the very end of this 1, 2, 3, 4, 5 coming down. And what this makes right here is this. It makes an A, B, and a C, right? Because this holds not true anymore, it doesn't make an A, B, C, D, E pattern, and now this makes a traditional zigzag, so we change up our theory. So if we notice that this 5 waves came down and it retraces up to a B point, it's just a counter trend. So it goes like this. It goes 1, 2, 3, 4, and 5, and then it wants to make an A, B, C correction like this, counter to the trend. Okay? And then right now we see we're here on EOS A, and here B is going up there, right? So now if we counted this as our A, B, and C right here, taking Fibonacci retracement from just A to B, or sorry, from just this beginning to A, we see that Bitcoin retraced to about 618, right? We see that Bitcoin retraces 618. Let's go see if we can see other big coins right now. Wow, this one here made some sort of 1, 2, 3, 4, 5 as well. It's harder to see, but nevertheless, it did make it. Let's see if we can see it on 1 hour. There we go, it's a little bit better in the 1 hour. 1, 2, 3, 4, 1, 2, 3, okay. I'd probably say, oops. This one's a really hard one to count, but I remember counting it before in another video. That's 1, that's 2, 1, 2, 3, 4, 5, 3, 4, and 5, right? So this one makes the A, B, C right here, and eventually it reaches a point at the top where it wants to make a B, and figure out if it wants to make a C, or sorry, a D. Or D and an E, right? So eventually it reaches a peak point of a Fibonacci level, right? What does this one? We're not going to count the flash crash of $1.20. That's kind of extreme, guys. We're going to take the average of it, okay? We're going to take the average of the bottom and the top there. And what we find is that, hey, this one also reaches a 618 Fibonacci region right here. That's very, very interesting, right? Super interesting. And now we have to correlate it to some more coins as well, just to make sure, is our theory going to hold that it's going to retrace this 618 Fibonacci region, right? Ripple's not a good one right now. What other coin is there? You know what? That should be enough. Just Bitcoin and IOTA. I don't want to go through a lot of them, right? Bitcoin and IOTA should be enough. So now we look at here, right? We look at here, and this one retraced to a respectable level. It really has. It retraces 618 level. What did Bitcoin retrace to? Bitcoin retraced to a, for the whole thing, look at that. It retraced to about the 0.5 level right here. So Bitcoin's fairly respectable as well right now. Okay, so this, of course, Bitcoin's a little bit more bullish, you can see in general. But this one here, guys, same thing pretty much. It retraced to about the 0.5 level, right? Before Bitcoin, it bounced up to that next coin, or sorry, next region. So guys, if we have actually done our Elliott wave count right here, 1, 2, 3, 4, 5, where this is indeed done, we're just gonna say 1, 2, 3, 4, and 5, okay? We're going to say that that is done about. And we are now also going to say that we're in this buy zone, right? This is kind of like a really strong buy zone in general. We failed to hold support here, which is a 382 level, but there's no denying that this buy zone right here is so strong. The reason why it's strong is because, guys, it's intersecting, first of all, with this right here. I'm going to delete this. I'm going to delete this. The most relevant trend line that we see is the one that I draw. Therefore, it is a very, very strong support zone. And if we extend this here, we see a lot of price action. Price action here also denotes a strong buy zone where volume is going to pick up. So you guys see a lot of volume right around this area, right? Specifically right here, volume-wise, look at right here. And now if I extend it out to over here, of course you're going to see lots of volume and price action as well in here, right? So right now, guys, we've been upticking about 40-50 cents already, and just assuming it's going to retrace 0.5 eventually, or 0.6, you know, and this is the very bottom, why would it, let's say you go to like 0.5, a conservative approach even, a 0.5, and it made some sort of pattern like this, right? Well, now we're going to talk about risk to reward. Let's say I enter a position right here, and I'm just targeting 0.5. I'm okay with the Bitcoin tanking, guys. I'm okay with the Bitcoin tanking and still hunting for setups. What a trader does is they are a hunter of setups, right? They hunt all day for setups, and they look for really good risk to reward possibilities. And I think that good traders have tons of potentials that they track, right, on Excel, like myself. I keep track of tons of coins this year, and they all funnel through the pipe, and eventually I'm going to have a setup that's going to come to fruition that I've been tracking, right? And this one, of course, I didn't short any of it to the downtrend at all, none of it. But because I didn't short it, at least I can try to catch it on the bottom, right? And now that the 5 waves are pretty much formed, I can say to myself, okay, well, this was a really long wick. It was really rejected. I'm going to set up my risk to reward now, okay? I'm going to set up my risk to reward under, like, where was it rejected from first? I'm going to put my mouse over here. The low it got to was 831.22, right? And the close was $10. So around the $10 region, it was so fast, like the rejection under $10. So I'm just going to go for a stop loss of $9. Stop loss at $9, say, where I have a chance to lose 15% of my money. And now I've got a chance to gain 29% of my money. And I've got a risk to reward ratio of 2. That's why I used 2 in the example. So we ask ourselves, is this a good risk to reward setup? If I took this exact same risk, played the exact same money, and also had the exact same chance to win the same percentage amount, if I had a risk to reward ratio of 2 to 1, would it be worthwhile to always take these setups if there was a 50-50% chance to win? And the answer is absolutely. It does make sense to consider it. Now, I'm no financial advisor, guys. I didn't go to business school. I didn't study economics in school or anything like that. I'm just an average guy that does this for a living and day trades, okay? So please, please don't take this as financial advice or anything like that at all. I'm just sharing my thoughts on the internet with the interwebs with you people, and yeah, and hopefully it will allow you to gain some insight over time, and it will be another source of information for you to evaluate you know, your opinion, right, to see if it's right or wrong. And guys, you know, a lot of people have said to me that my sense of humor has been off lately. It has absolutely been off. You guys are right about that. It's because it's been a really serious work month, right? Last year was more like relaxed and stuff and just chilling at the end of the year and near holiday season. But this year we got into some craziness in late December during my holiday, right? Like during my time off there, I missed pretty much everything. I basically came back to the biggest downtrend in cryptocurrency history. That's what I came back to. And now it's very overwhelming, right? So, but don't worry, I assure you guys, I know you guys probably miss my rapping. I'll end up rapping again very soon for you guys. So those are my thoughts. Like, I think that EOS has found support with this big candle right here. I think that I'm gonna target around the 0.5 Fibonacci level to $13.50. That's going to be my risk to reward play right here. I'm going to keep my stop loss tight at $9. I mean, the worst case scenario is that we just end up down ticking a little bit, right? We just end up down ticking a little bit more to another region over here. Let me just, like I told you guys, we down tick over here, right? To the 747 level. Now, let's just say hypothetically, you bought 1,000 coins. Okay, I don't want to say 1,000. I'm just gonna use 500 coins, and you bought it at 10.3. Okay. Okay, maybe maybe a lot of people can't relate to that. Let's just say you use actually, I want to use a bigger number. 500 coins, and you bought it at $10.30 each, right? Now, your stop loss can be right here. Now, assuming you know about position sizing as well, which I will assume the majority of you guys know about position sizing, you know, so you don't play your entire amount, okay? Just to be incredibly freaking clear, guys, you don't play your entire account ever, okay? And you don't play 100% of your account. You micro buy, you accumulate slowly, right? So if you bought it here, I'm gonna use this as well. So 500 coins at 10.38. right there, okay? And let's say you targeted the 0.5 Fibonacci, that's 13.5. 13.5, and your stop loss is at $9, right? And the resistance is, say, 13.75 for target 2. Well, you now have a chance to win $1,558, right? That's pretty good growth, I would say. Was that 13.5? Hold on, my entry is a little bit different here. Oh, 10.48, that's why. I meant to say 10.28. 10.35 and 9. Actually, your risk to reward's better. It's 2.43 about. Okay, 2.44, perfect. So you get a chance to win about 31%. Mine's not that accurate because I'm not getting the exact numbers, you know? So let's say you entered at, I meant to say 10.28. Well, nope, must have been 3.8 there. 10.28, 9. I want to get exact numbers. 13.5, and the price now 10.28. So the risk to reward was 2.52. But I have my risk different because I'm also factoring fees, just in case I get a small fee as well. That's why mine's a little bit less there. So here, we're looking to enter, say, around 10.28, 28359. 28359. Okay, so risk is about, say, 2.71 before fees. But with, or I don't know why this is actually that. It makes me wonder if my risk to reward formula is wrong now. Something a little off about it. Oh, I know why. Because I'm not using the resistance as that, okay? So let's say the resistance for target 2 was that, and you actually shot a little bit low. You have a chance to win, say, 28 to 31% of your money, $1,500 from a $5,000 position size. Is that reasonable? Well, but you also have to keep in mind that you're risking $642. And if you're risking $642, you must understand that without risk, there's no possibility of reward, okay? So without risk, once again, there's no possibility of reward. You always have to be mindful of that you have to be willing to lose money to gain money. Now, to some people, this might be an acceptable risk to reward. To some others, it might not be at all. And to some others, this support may not hold. And to others, they think that it would hold. I personally think that it will hold and it's worthwhile. Now, let's say I bought 500 coins, right? 500 coins at $5,150 total, right? And this is a small portion of my account that I can play. We'll just say that, okay? That this is a small portion of your account that you can play, $5,000, and you know you're holding a lot more than that, obviously, and you can manage your risk accordingly. Now, let's just say that it goes down a little bit more now. This is why I wanted to introduce this. Let's just say now it goes down all of a sudden to 7.48, okay? 7.48. Actually, no, we'll say first of all it goes down to, yeah, we'll say that. 7.48. And let's just say you're a long-term holder now, okay? Now, all of a sudden it goes down to 7.48. What we're going to do is we're going to take our Fibonacci. So we know it goes down to there now. We're going to extend our Fibonacci to the 7.48 region now. And let's say we're going to target 0.5 Fibonacci still, okay? Fibonacci still. And we're going to choose a stop loss. Stop loss, pretty much say a round number like 650, right? Actually, you're gonna choose a stop loss of, say, actually, oh, sorry, I'm doing it wrong. Let's say it sells to the fib level at 744, okay? 7.44. And then you buy another 500 coins, okay? You buy another 500 coins, or you double up on the amount of money that you want to spend. So let's say you bought another 700 coins. So now you're in a position for $10,358. And because you bought 500 at that price and you bought 500 at this price, your average price is now $8.63. So we're going to put this in here, $8.63, or was it 36? 63 cents, okay? This is now your average price. But now it has fallen to 744. That's where you bought it, okay? Roughly around there. Or we'll say 750. Just, you're not going to catch the bottom. Let's say it bounces off of there and you bought it at 760, okay? Your average price is 873 now. 8.73, okay? And now we're going to target 0.58 Fibonacci level still, okay? And then you're going to set your stop loss slightly lower than it to something acceptable, right? Because you're averaging out your position, you can also manage your risk as well. So now all of a sudden, right? Now all of a sudden, you have your target level is about 1306. That's where the resistance is, $13.06. You now have more coins than that. You've got 1,200 coins. Your position size is bigger now, and we're going to get into position sizing another day. So sorry, 1,200. Your average price is now $8.73. $8.73, right? $8.73 now. So now your risk, your stop loss will be somewhere slightly lower than here to a round number where we found its support, say 650. We'll go to, that's a pretty big risk though, like to risk that much for one trade. You shouldn't really risk that much. Let's say we risked it, we chose $8 as our stop loss, okay? That's a pretty big amount already though, $8 for our stop loss. All right, $8 for our stop loss. We'll take a look at that, guys. $13.06, $13.25, and $8. So here it says our risk reward is about 6.3. On mine, factoring fees and worst case scenarios, etc. And here it's probably more accurate. 13.06, right? 8.73, and my stop loss is $8. So here, it's the same now, right? 5.93, 5.93, the risk to reward. So we're using the same formula. So now with our $10,000 position sizing, right? Now that it has dropped to a different level, because we're also managing our risk, instead of originally cutting our stop, instead of it hitting our stop loss, okay? Let's say it hits our stop loss right there on the first case scenario. Well, the first case scenario, I'm just going to draw it out there. We would have been entering at $10. We would have been entering at 10.28, okay? We're shooting for, I forgot what level it was at, but our stop loss was $9, right? It was like a hard $9 with the chance to lose 13%, right? So if you were to lose 13% of that $5,000 there, that would have been about, what is that? $1,600 or something, right? You would have lost $1,600, right? So if you play this position over here, right? The position where we are right now, you'd have to play a bigger position just to make up for it. So other times what you can choose to do to, instead of just take a massive loss, and especially if you're holding for a longer term as well, right? Like, once again, I'm no financial advisor, guys, but a lot of the times I used to before, longer term, that I was going to hold, if I was confident in the coin itself and it actually had good fundamentals to follow, right, I would just readjust my risk. I would just readjust my risk by maybe even adding more to lowering my risk and choosing a different stop loss. So these are just some small methods. Like, there's so many different methods, guys. I'm trying to explain it in the best and easiest way possible, just because I know a lot of people might not even been introduced to risk before, right? But here, this is something that I'm most likely going to be interested in as well. And myself, I've got a lot of tolerance for pain. Okay, guys, I've honestly got a lot of tolerance for pain, and I don't mind losing up to 10% and making those bigger and riskier plays. I really don't mind at all in the least. And I don't mind losing up to 20% to gain a possible 50% at this specific level. So that is my bullish scenario, guys, that I have for you. My first bullish scenario is that if it hits to around the 618 Fibonacci level, we can still target a very healthy $13, right? If we actually bounce right here, then the Fibonacci is different, and we just take it from right here instead, right? We just take it from right here instead, and this target is still $14.77. So that was a $13 target in the extreme case where it goes to 618 Fib, and then in this case right here, it's a possible target of 14.77, just based on correlating it to Bitcoin and expecting a B bounce. But this method, this one right here, seems more likely, guys. It seems more likely because this wants to hold. This support line wants to hold. So guys, I'm going to have to go into a position, even right now, like around now, like, it doesn't matter to me if it swings like 2, 3, 4, 5%, because I've got my longer term target. Yes, I want to micro buy and manage it very slowly, but to me, guys, it's really irrelevant. It's a lot of work to manage it all the time like that. And for longer term positions, I'm just going to hold it. I'm just going to forget about it. I'm just going to stick to my stop loss and check on it in a few days and go from there. So guys, we are getting rejection right now, right? And we are getting some bullish signs of EOS, and then the 1, 2, 3, 4, 5 is about to form. And it can only go through so many parabolic moves, right? It can only do so many and go through so many at the same time. So I do believe that we are going to be finding some level of support very soon. Some level of support, whether it be now or right around this level and above the 6.8 Fibonacci level, just based on the 5 zigzags that we see already. And I am going to target 1377 to $13 to 1477. That's one possible target, right? And if I zoomed in very, very close here, and I have to guess the waves, 1, 2, 3, 4, hold on, 1, 2, like, it's, I couldn't even begin to count this particular wave in here, right? 1, 2, 1, 2, 3, 4, 1, 2, 3, 4, nope, 1, 2, 3, 4, and 5 in there. But I only count 1, 2, 3, 4, and I'm gonna guess right around here. A good entry, guys. A good entry is going to be between, like, above where we just got to a low of, like, $8. Honestly, like, the range is really incredible that I'm going to be using, but I'm just going to say that a good entry is honestly going to be between $8 and $8 and up to about $9.50, right? That's going to be my target range. $8 to $9.50 to $13 and $14.77. Those are still some pretty big gains, I would say, and I'm going to take the risk. It's absolutely worth it to me. And make sure you guys ask yourselves as well if this is a setup that is interesting to you guys, if it is worth the risk to you, right? And, you know, if I'm wrong, I'm wrong. So be it. But the point is, I try to be more right than I am wrong over time. And I see this risk to reward as trading profitably over time, because you're trading using probability, right? you're trading using probability, and you're trading just using simple statistics that if you use a risk to reward ratio of 2 to 1 and you had a 50% chance, there's a 100% chance literally that you will profit over time just based on that. So guys, those are my targets. I will be looking at entering very closely between about $8 and 9.50ish, and I will be targeting around $13 to 14.77. That's going to be my prediction. So I will see you guys later. If you guys love my videos, you're welcome to like, subscribe, and share to it on YouTube and on Twitter as well. And also, I'd appreciate an upvote on Steemit, where there is a written blog version of this for the people that don't want to read very long things or watch very long videos. And I've got to do these TA for myself anyways, you know, guys. I gotta do it for myself anyways, so why not just blog about the whole journey while I'm going through it, right? Because I'm honestly thinking about this stuff in my head anyways. Why not just make a video on it and just think out loud, right? So you guys can have a source, not the source, okay, but a source of information combined with all of your other sources as well, so you can build your own opinion and get your own perspective and from other people as well, okay? And if you guys absolutely love my videos, you guys are welcome to donate to the cryptocurrency piggy bank. Honestly guys, the cryptocurrency piggy bank, it just all goes towards my dog for emergency funds, and I just keep it there for like I really appreciate everybody that's been donating to it, right? Like, she's collected basically a good health bill for the whole year now. So yeah, so I really appreciate all the love and support that everyone's been giving me so far, and I really hope that it has improved your trading to some degree. That's the intent of all these videos, right? People think I'm making all these videos to like get all these monetized ads or something on YouTube. Like, I just want you guys to know that like YouTube pays me like 50 or 100 bucks a month, you know, for those monetized ads. It doesn't pay much at all, guys. Like, I don't got millions and millions and millions of subscribers, you know, that gets millions to billions of views, right? Like, you need to have a massive channel to get that kind of revenue to live off of it. You guys can even go to my YouTube, like Social Blade, just type in Social Blade, and then you can go to my the website there that tells you all of the YouTube stats and stuff, guys. Like that, YouTube pays me nothing. I just want you guys to know, and you can see for yourself. And I'm not shilling the coin. Like, I'm not promoting a coin in any way at all. I'm just doing it from a purely technical analysis perspective. I'm not getting paid by any company to promote their coin, you know, nothing like that. So this is all from the benefit, or for the benefit of the community, and from the goodness of my heart. And I just want to make sure that you guys have the same kind of success that I've had in 2017 with cryptocurrency. And I think that technical analysis can really improve the game of everybody. So I look forward to seeing you guys in my next video, and hopefully we'll see more of each other. Have a great night.